Welcome to another episode of Loan with Jen. Whether you're listening in on the podcast or watching us on YouTube, we are going to talk today about bank statement loans. So that's the craze. A lot of people ask us about bank statement loans. So I have a special guest today, Kara Eubank. And Kara, hey Kara.
Hi.
Kara has been not a new person to the mortgage world. In fact, she was working hard during the early 2000s back in the subprime days, which was the beginning of loans where they kind of look the other way on certain stuff. I guess you could call subprime. Is that a good way to describe subprime?
I would say so. Yes.
They just ignore certain things that might be there. So Kara has a lot of good things to offer. She actually works for a company that is called non-QM. So that's where the bank statement loans fall. So Kara, tell us, welcome, by the way.
Thank you. Hey, thank you. Thank you for having me. I appreciate it.
Yeah. Thanks for joining us. And so what is a non-QM loan? When people hear non-QM, like what the heck is that?
So non-QM stands for non-qualified mortgage. So basically, a majority of your borrowers fit a certain criteria, and that criteria can allow them to go conventionally. We, on the other hand, we are outside the box. We manually underwrite. It's for those borrowers, especially like we're going to talk about the self-employed borrowers. It's a great program for them because when you're going conventional, you're probably going to use tax returns. Well, these borrowers, hopefully they're writing a lot of stuff off, but their tax returns reflect a certain number. Well, they actually make a lot more money than what their tax returns say. So that's kind of where we're a little bit one-off, and we specialize in certain borrowers, I would say.
So the non-QM loans is really a good definition for people to understand. Is it's loans that are outside of conventional. They don't fit in the box, because you're right. The conventional loans, which I've specialized in for a long time, you've got to fit certain criteria, and there's like no way around it. And so we're really great to have partners like you. So Kara works for Angel Oak, which is a big non-QM lender nationwide, and we're lucky to be affiliated with y'all. So let's talk about bank statement loans. So that is one non-QM product.
That is our most popular non-QM product that we have. And it is for those self-employed borrowers. They must be self-employed for 2 years. But it's for those self-employed borrowers. Like I had said before, they make a lot of money and they are hopefully writing off everything, but we're going to only use their bank statements in order to qualify them.
So first, how do you verify that they've been in business for 2 years? So like, let's say I'm a Schedule C person and I self-file. Let's say I don't have a CPA. Is that bad?
We like to see a CPA letter that will prove your how long you've been in business. Yes.
Or you could get a DBA certificate or.
Exactly. We look you up on the Secretary of State or BizPedia and just kind of verify it that way as well.
Okay, cool. And so you've got to be in business for 2 years. Now you have two programs. There's two types of bank statement. One is 12 months and one is 24. So let's do the one that's the hardest, which is 24, let's say. So you have to do 24 business bank statements, right?
So we can use either 12 or 24 personal or business bank statements. Normally we ask for 24 if they're available. We can always change the program to 12 months if they're just absolutely making more money in the last 12 months than they did over the span of 24 months. That's kind of the beauty of it, is that there's little rules and things can be bent. We do exceptions on many loans. So if there's some one-off on there, then we will send it to our non-agency group, which is kind of like our pre-underwriters, and know from the beginning whether we can or cannot do that loan.
Because there's a formula that you use. So like, let's say I'm going to do the 12 months. Let's say my last 12 months is better than the 24. And I give my business bank statements. Like, how are you analyzing? Do you just take the gross deposits, or do you, I know there's a formula to it, but kind of in layman terms, what would, how do you look at it?
That's a great question. So just for a pre-qual, all we need is a 1003 on that 1003 or the IRLA. On that, we don't want any income, and we just need a credit report and then their bank statements. Once I receive.
Hang on, for some people that are listening, they're like, what's a 1003? So it's an application. It's a form number. Remember, these are home buyers that are listening. So you have to.
Thank you. I appreciate that. I know.
Break it down.
I'm used to just loan officers, really, and realtors. So they kind of know. So my apologies. Yes, a loan application. And so with that, we have a team of experts, a bank statement review team, and we just send that straight to them. That's all they do all day long. And they calculate that income for us. Yes, they normally take all of the deposits and add them up, of course. We default to a 50% expense ratio. Depending on what you do for a living is what your expense ratio will be. So let's just say if you're a realtor, then that expense ratio, and you're working from home, you don't have any assistance, that type of thing, we can go below a 50% expense ratio. All we need to prove your expense ratio is a CPA letter or a tax preparer letter.
Okay, so they default that, like, let's say I have $10,000 in my bank in any 1 month, 50% is 5,000. So they just assume 5,000. Okay.
Right.
And so they do that every month cumulatively, and then they add it all up and divide by 12, I'm assuming. So
you're exactly correct.
Okay, cool. So obviously this comes with a price tag, which means higher interest rates. So is 12 months bank statements a higher interest rate than 24?
It depends on your credit score. It depends on your credit score.
Okay. Yes.
Yeah.
Credit.
And right now it kind of depends on the day.
We're back. So so basically the rate, mostly, whether it's 12 or 24 months, it sounds like the credit score, because we're not really relying on much else. I mean, bank statements, of course, but credit score is going to be super important. So on average, if I want to be in the bling bling zone on these programs, what's kind of the score that really is going to do me the best favor in the interest rate? Above 740, 760?
So with a 720, you can get 90% on our bank statement loan. And we never charge any mortgage insurance. So 90% with a 720.
Oh, wow. So 90% means 10% down as long as you have a 720. That's super cool. And if you don't have a 720, like let's say I have a 680, like what's the minimum credit score that you could have on this program?
A 660 is the minimum credit score, and that's at 75% LTV. So they would have 25% down.
25% down. That's great. Mm-hmm. Yeah. And I mean, the rate, so right now, at the time of this recording, interest rates, are in the sixes somewhere. So would you say that the programs are usually like 3 to 4% higher than what conventional is?
Possibly. So we actually have two bank statement programs. We actually have one, it's called a business bank statement elite program. And basically we have to have business bank statements. There's a little different guidelines on that one, but it has much better rates. So those rates are probably in the 7s to 8s. On our regular bank statement program, if we're using personal bank statements, it probably would be closer to 8 or 9.
Yeah, cool. Mm-hmm. So just to recap, business bank statements could be an awesome thing. And there's no prepayment. Is there a prepayment penalty usually on these loans?
Only on non-owner occupied.
So that means investment. So you can do it on investment too.
Yes.
Yeah, that's super cool.
We can do investment. Can I tell you, Jen, the reason kind of why we do these loans and who we market to? Like those self-employed borrowers go to, you guys, and they've just been told no. And we've actually opened this program because these are great borrowers. They are savvy people who own their own businesses and shouldn't be shunned because they're writing stuff off like smart people do.
Yeah.
So that's what is the beauty of this program. The buying power, you can, if you go off of their tax returns, their buying power, it may qualify for a $300,000 loan. Well, when we get the bank statements and we see actually how much they make, their buying power can go up, to 6, 7, 800,000. It depends. So we do offer, do pre-qualifications on to be determined TBDs if they don't have a property. And that I actually prefer doing that. So I can give you the pre-qualification to you, Jennifer, and then you can tell them, hey, you actually can qualify for this amount of a house, this amount of money to go to, toward the house. So that's what is so special about this program.
That's cool. So the thing that I want buyers and realtors that are listening and watching to know is that these programs are not offered by all lenders. The company that I work for, Legacy Mutual Mortgage, we have a great relationship with Angel Oak, and we do this to expand our offering to buyers so that we can make more loans, of course, to more people and not be the ones that are saying no. So in your market area, I always tout using the local lender for everybody. So if you're listening to this and if you're in Texas, please call me. But if not, in whatever state that you're in, look for a local lender, get a recommendation from your realtor so that you can get with a company that has this program. They're probably sending it to Angel Oak. And get in the know. It's a great program. Like you said, it's meant to serve a part of the market that they need to be helped too.
And under this bank statement program, we also have a 1099 program. So with that same 1099 program, we just need 1 or 2 years of 1099 and then the year-to-date, either bank statements or year-to-date income from the employer.
Now do they have to be 1099 for at least 2 years as well?
Yes, we would like to see that they're 1099 for 2 years. However, if like I said, if there's a one-off, we're always more than happy to ask our non-agency desk to see if we can get an exception by chance. If they had been W-2'd and then just they're shy of, they're maybe have been 1099 for 22 months, it very well is possible that we can make those exceptions.
You might be able to. Yeah, that's awesome. Yeah, we love working with y'all. Well, good. Well, Kara, thanks for helping shed some light. I just want to bring some knowledge to the community. I'll put some information and some more helpful links in the description and show notes of the episode. And thank you for joining us. I appreciate your time today.
Jennifer, thank you so much for having me. It was wonderful. I enjoyed every minute of it. Thank you.
You got it.